Hello traders, welcome back to my channel Finance Masterclass. In this video, I will show you the difference between Fibonacci Retracement and Fibonacci Extension tool. Many traders tend to get confused on how to use these two instruments, and some do not know the purpose of using them at all. Fibonacci Retracement tells you when or where a stock or a currency will retrace to before continuing the trend. It can retrace to 38.2, 50%, or 61.8% according to Fibonacci. Therefore, the purpose of Fibonacci retracement is to know the right time to buy or sell. The right time to buy or sell a stock or currency is when it retraces to Fibonacci level. The Fibonacci retracement levels are 38.2, 50%, or 61.8. Let's look at example in our chart. The first thing you need to do when you want to use the Fibonacci retracement is to identify the impulse wave. The impulse wave is the wave that moves in the direction of the trend, while the corrective wave is the wave that moves against the direction of the trend. Let's look at this wave. From here to here is what I call the impulse wave. Then from here, when the price began to retrace to this point, is what I would call the correction or the corrective wave. All right. So I'm going to put a label to them so that you can have a more feel of it. Let's call this point A. Then let's call this point B. And then we call this correction side, we call it C. So what I do is, you will go and take your Fibonacci retracement tool and look at this point from point A to point B. So this is your Fibonacci retracement tool found at the top left hand side of your platform. This point here, you click on it, you click on point A, you drag to point B. You click on point A, drag it to the level of point B. Then you'll be able to see the retracement. All right. So as you can see, this is the point C that we are looking at, and this point C corresponds to 61.8% Fibonacci retracement level. So let me repeat again, you click on this, you click the Fibonacci retracement, then you come to this point there, you click on it, drag to point B, and then you release. Then you can see this retracement, the correction that happened from B to C corresponds with Fibonacci level 61.8, and a trader can simply place a buy trade at this level. Remember, all the things you are seeing at the front here has not happened at this stage. You are only looking at a stock that is dropping down, a currency or stock that is dropping down up to this level, and you want to know whether you should buy or sell. So what you do is you judge it using the Fibonacci. So you judge this impulse wave from here to here. A is the beginning of the impulse wave, and B is the end of the impulse wave, and this C is the end of the corrective wave. So at this point of this correction, you want to know whether you should buy from here. At this point, you begin to see a green candle here overtaking this candle here. this bear candle here. So what you want to do is to know whether you want to buy. At this stage, you quickly apply your Fibonacci retracement tool, and you discover that 1.8 here is your Fibonacci level, and this correction corresponds with that Fibonacci level, so you know you should buy from here. All right, if I want to judge this trade further, what I will do is to apply another indicator called the moving average. Let me apply my favorite moving average, which is the 50 MA. 50 MA is one of my favorite moving average. There are other moving averages that I use. The 50 happens to be one of my favorite. So I will apply 50 and see what is happening there. Let me go to indicator, insert indicators, go to trend, then moving average, then you change it to 50, then click OK. This is my 50 moving average is there. Oh, that's great. As you can see, this point here, this point where I would have taken this trade corresponds with the moving average, with the 50 moving average. So what some people do is that when they are using Fibonacci, they combine it with other tools such as moving average in order to be more convinced of the trade. So from what I can see here, this trade is worth taking because when judged by the Fibonacci, you would have taken the trade, and when judged by the moving average here, you would have also taken the trade. This 50 moving average is offering a very powerful support here, corresponding with the 61.8 Fibonacci retracement. So when this stock moves from here to here and then retraces back to this point, you could have placed another trade here. If you were previously on a trade from here, you could have placed a trade here. So we call that trade, you are trading on retracement. So you place a buy trade here and exit either here, or you project further to take more profit. One of the simplest thing traders do is, if you have 1 R risk, you should expect to make 2 R as your return. If let's say you are risking 20 pips, you should be making 40 pips. All right, so you measure it. If you are risking your stop level, your stop loss is 20 pips, you should be making at least 40 pips. If you are using 3R, you should be making up to 80 pips. So you should place your trade here and expect your profit. And as you can see, this trade went on to become a successful trade, because as I told you before, from here, you didn't know it was a future to you at the time you were taking that trade. All of here to this point, they have not happened at that point in time, but you took the trade here and it became a successful trade at this point. At this point, some would have exited the trade, while some other traders that know how to manage their profit very well won't even exit at this stage. All right, so as a whole, one would wonder, when is the right time for me to take my profit? So that is when the Fibonacci extension tool comes into play. Now let's look at Fibonacci extension tool. Some charting software call it Fibonacci projection tool, others call it Fibonacci expansion tool. They are all the same thing. So Fibonacci extension tool will help you to anticipate where the price is heading to. It will help you to anticipate where is it heading to. The purpose of Fibonacci expansion tool is to tell you where you will be thinking of taking your first profit. It will help you to set your profit target. Let's look at our example. From this example we have here, the beginning of this impulse wave is A, and the end of this impulse wave we are looking at is B, and C is the correction. All right, C is the end of the correction. Now let's pick up our Fibonacci expansion tool. Let's go to insert, go to Fibonacci, and then here you see expansion. Click on that expansion. You come to point A, you click on point A and drag it to point B. All right, here we are at point B. All right, so we are at point B. In order to move the third line, you see one of the major difference between Fibonacci retracement and Fibonacci expansion is that Fibonacci expansion has an additional sort of line here at the line C. So you double click on it to make it active so that you'll be able to move that line C. So this additional line that it has, you drag this additional line to C. All right, so that is Fibonacci expansion or Fibonacci projection or Fibonacci extension, the same thing. So you drag it, this additional line here, you drag it to C, or you drag it to the end of the corrective wave. So our purpose is to determine where should be our profit target. So that being the case, our first profit target should have been at Fibonacci extension 100. 100 should be our first profit target. This 61.8 you are seeing here is to give you 1:1 ratio of profit. So if you make your first target 68.1, means that what you gain is what you would have lost. But that's not what we are looking at. We are going to make twice what we would have lost if we are to lose this game. So our first target is going to be 100, extension 100, which is at this line. So if you place your first target at this line, you should have been able to make a good deal of profit on this level. From this level, you should have been taking your profit anywhere on this line. All right, so that is our first target, and our second target is 161.8, extension 161.8, which is still further up. If I move it a little, you will be able to see it is further up. Just this line is hiding it. If you minimize your chart, you'll be seeing 161.8. It's going to be around here. All right, but I just want to show you that the main purpose of this instrument is just to take your profit, to estimate your profit. So if you minimize your chart, like how we do, you will be seeing it. You see it, see the line there, 161.8, which is at this level. All right, if you have found value on this tutorial, simply give us a like and hit the subscribe button as a way of encouraging us to continue to do more. Thank you very much and see you on the next video.